Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host another Red Cloud webinar on uranium today. We are going to talk to GoviEx CEO Daniel Major. Now, during today's webinar, he will provide an overview and outlook. Then we will take your questions. We'll get to as many as we can. You can type your questions into the chat box. But before we kick things off, first we need to discuss the fine print. During this GoviEx webinar, forward-looking statements may be made, so I direct listeners to the forward-looking statements outlined on page 2 of the GoviEx corporate presentation. That can be found on the company's website, goviex.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research on the Red Cloud website for specific disclosures on GoviEx Uranium. So with that, I now turn it over to Daniel to update the audience on GoviEx Uranium.
Thank you, David, for the introduction, and thank you for everybody who is attending. I will certainly run you through GoviEx, give you an update of where we are on Muntanga, and we will start with the disclaimers. Thank you very much, David, for doing my job on this one. They are there. They're on the website to be found if you feel like you need to read them. So let me just start, though, with Niger. As you can appreciate, on July the 4th, the government of the Republic of Niger withdrew GoviEx rights over the perimeter related to the Madaouela mining permit. In our opinion, this decision did not follow the withdrawal procedures prescribed under the applicable law, and we felt it was unlawful. We have filed notices of dispute with the Ministry of Mines, as well as requesting an administrative recourse with the president of the country to contest these decisions and to also lay out the clear positions where we did not feel it was lawful. But we've also, as per protocol, sought to seek an amicable solution per the mining convention. That process will finish during November. We continue to reserve our right to challenge this decision, to withdraw the mining rights, and we can go before competent national and, more importantly, international jurisdictions to follow our rights through. As major steps go forward, we will update the market of this situation. The current situation, though, does present a unique opportunity for us because it allows us to focus all our efforts onto the Muntanga project, and that clearly has got great potential and is poised to become the cornerstone of our company as we go forward. So we continue to focus on Africa. We continue to focus on the mining permits associated to the Muntanga project in Zambia. We own 100% of it. We are currently completing the feasibility and the ESIA, which will be completed very soon. It is a very simple open pit heap leaching operation. The uranium sector remains strong and I believe will continue to get stronger, with security supply issues and clean energy being major parts of where that drive is coming from. Zambia continues to be a positive country for us to invest in. It is a mining country. It is historically a major copper producer and at one point was the largest copper producer in the world, and is now very much focused on expanding that copper production and on diversification. It is also the longest democratic government in Africa and has been since it became independent in 1964. And we've now started as well to look at the exploration potential beyond our own exploration and mining permits to see what other opportunities are in the country to leverage off the Muntanga project. So Muntanga, it is mine permitted. It's a process that in some places can take a very long time. We benefit from that. It's very close to Lusaka, the capital city, and about 10 hours to 12 hours drive from the copper belt, with good access to major ports, both out in Tanzania, coming out of South Africa, or into Namibia. good infrastructure with good road access all the way to the property, plenty of water, and in most years, exceptionally good grid power. Zambia this year, though, has been impacted by an extreme drought that affected all of its hydropower. 80% of its country is hydropower. But I am glad to say it has started raining again. And hopefully, as we've seen in the past, when we get to this extreme, we then get a very long period of stability with the rains coming through. So still very much on track to complete the work on our feasibility study and ESIA. I would like to point out at this stage that on the feasibility study, we are going from a PEA to an FS in a single step. And that obviously, in a normal step, when you've gone to the PFS with its trade-offs, we are doing those as we go through the feasibility study. Ultimately, this is fast-tracking the process and ultimately reducing the overall cost of both of those steps to be done. So it's almost completed. We have most of the work done from a costing point of view. The major change is that we're just looking at the mining schedule. Now we've got a lot of the other input costs to make sure we're doing the most optimal approach towards that. On the geological setting, it is structured within the Karoo supergroup. This is a series of sandstones that go all the way through Tanzania, through Zambia, through Botswana into Namibia. We are looking for the contact zones where those fit against the basement rocks and bring in the uranium solutions that come through. And as you can see, it spreads all the way through Zambia. It's well understood, simple metallurgy for it. So we've got three main mining licenses, Dibwe and Muntanga, which we acquired from Denison Mines, and then the Chirundu license that we acquired from Africa Energy. It's a series of 5 deposits, though 2 of them, Muntanga and Dibwe East, have the main part of the resource in, about 80%. These have been to PFS in the past, allowing us a big step forward on our metallurgy, but we decided that we wanted to do all the metallurgy again, particularly as they had not done the Dibwe East deposit before. So we've gone through that whole process, and we wanted to verify those numbers and bring them up to an FS standard. The mineral resource, we updated it in March of 2023 after a substantial period of drilling between 2020 and 2022, where we focused on the infill drilling on the Dibwe East deposit, which at the time was a fully inferred resource. We effectively made a massive conversion on Dibwe East, converting 2/3 of it into indicated. At the same time, that resource actually grew and left us with more inferred resource. We went deeper as well and moved down into primary ore that wasn't previously noted. As noted before, our centralized operation, which is Muntanga and Dibwe East, is well over 80% of the total resource. So from a project risk point of view, that is the core of this business, with the satellites, either Dibwe or the Chirundu ones at Gwabe and Yami, being very small parts of the project in total. Also note that the 2023 resource is based on $70 a pound. We're obviously higher than that price already, which may have some impact going forward onto the total resource, as you would expect. Higher prices tend to allow more pounds to come into resource. The next update of the mineral resource will come through as part of the feasibility study. We recently put out some very impressive metallurgical test work. As I said, we went back and redid everything. We wanted to better understand it. We also wanted to test our view on agglomerating right up the front, which means you're putting a lot of acid in right at the beginning in very high concentrate so that you can marinate the rock before you actually start the leaching process. And that clearly proved its worth with very high recoveries, predominantly in the 90s. With the exception of Gwabe, which is a more difficult model anyway. Acid consumptions generally stayed similar to where they were, But even where we have small increases, the increase in recovery has generally been a lot higher and countered that. The new one is Dibwe East Primary, which had never been assayed before, and is a primary uranium mineralization, not the weathered secondary mineralizations we predominantly have in the other deposits. Also, these recoveries are coming very quickly within 20 days. These are low acid consumption, and what it has allowed is us to focus on a more small on-off pad rather than building one large high capital cost pad. The feasibility study will look at smaller on-off pads, which reduces the upfront capital. There is exploration upside still on the Muntanga license. The figure on the left-hand side, Muntanga East, those are the Muntanga deposit and the Dibwe East deposits. You can see with all the black dots all over. And to the northeast, you can see the Muntanga East deposits, which have a number of holes in, but have never been drilled through to resource. And then just south of the project, we have Kariba Valley, an exploration permit that we have down there, which has a number of anomalies with drill holes in as well that have to be continued to drill through on that basis. So plenty of potential there. We did earlier in this year as well decide to go and start looking at what other potential was in Zambia. As pointed out earlier, the Karoo Rift Valley goes all the way through from Tanzania, where you've got projects like Mkuja River. You have got Malawi with Kailakeria. Then you come down to us and then into Botswana for Leflekani. So there was no other exploration that we could see across the country. You do have uranium production out of Lumwana copper mine, but it doesn't take it all the way to U308. They store it on resin there. So there's clearly potential. What this figure here is showing you is the brown area is the Karoo sands. The basement rocks are the red ones. So we're looking for that contact zone along the edge. We were able to pick up a lot of historical data from a previous explorer back in 2007, who subsequently left the country with the decline in the market out there. So we were able to get that. That guided us towards Lundazi. We've signed a joint venture agreement on that to earn in a small amount up front. And if it's interesting, we'll continue. This allows us as well to just check out that part of the world for a very low cost and see whether our geological model works in that area. And if so, we can obviously strategically figure out what the next steps are going forward. We continue to focus on our community side as well. This is important. You have to have a social license. We target a number of areas in education, health, and other aspects as well. But the key focuses at the moment are on training the population nearby so that they can benefit from the jobs that we hope to be able to produce on this operation once we've got the funding in. So we already had started the back to school program where we have about 500 adults who are trying to get themselves certified to grade 4. We've started a vocational training program. Initial test work on that has gone well, and we're looking to expand that out. As well as that, we do other investments into clinics, schools, and water for the various communities. And that keeps the communities very much on side with us. They're very supportive and are very keen to see a uranium mine get up and running. With regarding the market itself, we've clearly seen a strong market overall. I mean, the global commitment to greenhouse gas emissions continues to be looking for reduction, for looking clean energy. We've seen expansion, particularly from Russia and China, on new reactors, both of them in the second half of this year announcing 11 new reactors each. Japan continues to restart its nuclear reactors. And we're certainly seeing a lot more advancement on SMRs around the world. Against that, the uncertainty of supply continues to be there. Whether that's reduction in supply from places like Kazakhstan or BHP Billiton, Olympic Dam not coming through on their expected volumes, whether that's projects just taking longer to get their permits. it clearly is putting increasing pressure on how to fill that supply gap. And at the NEI conference 1 weekend ago, that was very much part of the conversation of where are new projects going to come from. But I think the more interesting side and part of the conversation that was going on at the NEI are certainly how uranium and nuclear has become very much more normalized out there. We've got a lot of countries now looking to extend the life of their nuclear reactors, with 60 to 80 years being very much the norm now, and there continues to be reactors in the US as well are putting those applications are. We're even seeing it in sort of anti-nuclear Spain, the same process going through as they seek to maintain power they need. We're seeing older reactors starting to come back on stream, the most obvious and noteworthy being 3 Mile Island with Constellation Energy and Microsoft, but also Duane Arnold and Palisades, all being reactors that are looking to come back on. But I think the big story recently has been the AI and data centers. I mean, the ramp up of AI is making the utilities sit up and realize that power has got to be supplied to them. Most grids around the world are close to their capacity anyway. And with AI, additional power comes in. With those AI, it is tending to come from the companies that require clean energy. And clearly you cannot run an AI center on renewables. So Microsoft, obviously at Constellation, but you've seen Google, Amazon, Oracle, and Apple all pushing towards backing SMRs predominantly. And that push of money into the SMRs is clearly starting to drive those SMR projects forward. We had the AIEI come out with its forecast as well of nuclear energy, which is even more aggressive than the WNA's forecast the previous year. And now we're starting to see increasing financial aspects towards nuclear, with a lot of the big banks coming out to say they will support it. And we're now starting to see more big funds turning towards nuclear, the most recent one being Apollo, looking to finance the Hinkley Point project here in the UK. So money is starting to come back to nuclear in size as well, which obviously more demand for nuclear means more demand for uranium going forward. At the moment, things are quiet, and certainly talking to all of the utilities that we met at the NEI, and they're all predominantly the US ones. The issue at the moment is they're quite well covered where we are today for the next year or two. But almost every single one of them we spoke to is from 27 or 2028 onwards. They have got gaps in their book, fairly substantial ones that need to be filled. And that will become where they're starting to look to put their long-term contracts. So at the moment, they've done a lot of work trying to get off Russian material. That's resulted in them filling their books and taking that risk now. But as we go forward, that risk is going to become fairly substantial and a real need to find uranium pounds. And I certainly expect to see the uranium market continue to go from strength to strength on the back of that. The board, very experienced. They all bring different aspects, whether that's on ESG, whether that's on financing, on project development. So a lot of skilled people on the board. Capital structure, we are sitting with a lot of shares at 812 out there. We currently still have more than enough money to get us through this feasibility study and well into next year. So for an investment case, obviously the market there, we have the management and the board to get this project through. The real focus is on this feasibility study. As I said, most of the costing is already done. It's just a reschedule of the open pit. Now we've understood what the very aspects are. We are taking a PEA and turning it into an FS. It comes with trade-offs that we have to do. But with the backup of those kind of metallurgical recoveries, those quick recoveries off the heap, you know, this is looking like a very positive project. And we hope to be able to present that feasibility study to you very soon. We are mine permitted, and we are looking at exploration opportunities as well to be the next stage for us once we get Muntanga up and running. So, thank you very much.
Thank you, Daniel. Great presentation, nice and quick and concise. So gives us lots of times for questions here. We already have a few. Reminder that you can type your questions into the chat box at any time. and we'll get to a bunch of these. So, Daniel, I guess let's start with Niger. You know, are you going to try to gain compensation for withdrawal of the mining permit? Is there any chance that asset might come back in the fold? You know, what's your preference there if it can be done?
I mean, look, at the moment, with the government where it is, we will have to see what their next step is. I mean, it's very unclear what the Niger government is trying to do. Yes, of course, we believe, I mean, it was inappropriately taken from us. We believe there is value clearly in that project, and we have lost out that opportunity. You know, as we said to the market before it was got taken, we told the government we were lining up debt for that project, you know, before it all went wrong. So yes, our next stage is we have to go through this amicable process, and that's very much part. If you want to go to the legal aspects, you have to show that the law courts that you have followed all other alternatives before turning up in court, and hence going through the amicable process and trying to get a conversation going. And we have written a number of letters to the government. We obviously don't want to be, you know, we're in a strong position where we stand. We don't want to weaken that position. And so we'll see when we decide to go legal with them, what their response is, and then play it through from there.
Mm-hmm. Okay. Yeah. Incidentally, you know, I know they also took the Imararan asset away from Orano. Orano just made the decision to halt all production in Niger, something that probably caught the government as part owner off guard. So, you know.
Well, I don't think it should surprise them. The government in Niger has made it very difficult for Orano to operate the Somaïr mine. Orano restarted it when the government was threatening everybody to not doing things. They tried to keep moving. They had sanctions that blocked them getting chemicals in. They got up and going, and the government has made it very difficult for them to export any uranium out of that country. In fact, no uranium. So there's going to be no uranium exports out of Niger this year. I did see a rumor in there that the government, the Sopamin, was trying to buy uranium off Somaïr, so clearly it was trying to get it cheap. So I don't think the way the government has been behaving towards Somaïr has been fair, insofar as they've effectively stopped them functioning, but expected them to continue to fund operations.
Mm-hmm. Now, so obviously focus is now on Zambia. Maybe Muntanga aside for a second, would you consider seeking other projects? You know, or you did mention that there's exploration upside up and down this belt.
I mean, our primary focus, I think, at the moment is to get Muntanga going, get through this feasibility study, get into the project, get it financed, to get a cash flow going into the company. We obviously see there's some opportunities in the country, and I think it's when we did a review of the cadastre, we could find nobody else in the country exploring for uranium. So it is an opportunity to have a look and see what is out there. We are predominantly on the south side of the country, but we can see, as you saw from that chart, the potential of those Karoo sands over on the east side. And so for very low cost, we want to go out and check it out and see what's out there. If there are opportunities, then we'll figure out how best to work on those opportunities to go forward.
Mm-hmm. So Muntanga, you are working on both your feasibility and environmental and social impact assessments here. What are the timing on these milestones?
Well, the one on the feasibility study should be in the next few weeks. I mean, literally, as I said on the call earlier, most of the costings are in. The major change is because we've got the 5 different deposits, we had made an early assumption on how they should be scheduled through. As numbers came through, we decided we didn't like that schedule, and we thought there was a better schedule on timing, and that is the process going through at the moment. As simple as that. The rest of it's just sitting waiting for that mining schedule. Unfortunately, it takes longer, as you probably know as a mining engineer, than you would expect. Once you've scheduled it, you then have to connect every little block up and do what's called a haul sim to work out how many hours are going to be consumed by all the haul trucks, so you can work out how many haul trucks. And it has to be done to a feasibility study level. So it's not just a slide rule on a bit of paper. And that just takes time. And the guys are working through that as quickly as they can. So hopefully in the next few weeks, the ESIA, we've done all of the main work for it. It's waiting for the feasibility study, because part of the ESIA is the feasibility study itself. And that will go in, and then that can get filed. But we continue to deal with ZEMA, the Zambian Environmental Ministry, all the way along, so they know what's coming. We went through all our terms of reference through them as well, so not expecting any surprises. And this is a very straightforward project. There's no difficulties. We don't have anything like, iron in our rock for acid generation. We are designing a plant that recycles its water as much as we can, as well, to avoid discharges and things like that.
Mm-hmm. Now, you mentioned timing there, and it does look like you're trying to fast track this. Is that the main reason why you decided not to do a pre-feasibility study? And what are the sort of the trade-offs there by not doing it?
Well, I mean, the trade-off is angst, probably amongst my consultants, who want a simple path in life, and I'm not allowing them a simple path in life. So that is your biggest trade-off. I mean, normally you would go through this process, doing a PFS. You do quite a lot of trade-offs back then, and say, well, this and that. We knew what the metallurgy was going to be because our peers had already been through it, and they had very similar metallurgy. The biggest change for us was the agglomeration. We hit it very hard early on, and that gets us quick recovery, and gets those high recoveries as well. Was it going to be a heap leach? It's always going to be a heap leach, but it became very clear that we could get away with an on-off when we realized that the material that was going to be coming off is very clean, and could be taken off and discharged. And that means you don't have to prepare as much land up front. The infrastructure design, we know where the power line is and we know where the road is. It's really, as we shuffle things around, some things had to move about. So there was nothing major here. I mean, you decide you're going to put this building here and you're going to put that building there. But once you would do some of that in the PFS, when you get to the FS, you kind of keep moving buildings around until everybody's happy. But if you move buildings around, then people have to keep going back to the terrain model and work out what their cut and fill is. So it's not just a straight two-dimensional put a building there. Somebody has to go back to the terrain model and work out, right, I've moved that building, I now have a dip there, or I have a rise, I've got to cut or fill on that process. So, but ultimately, PFS is costing you, $1 million plus. We didn't have to do that. We've left that gap out. And it means I've taken out about 2 years of work to be able to do this a lot quicker. So it is a lot faster. It is pushing us towards getting this project into development as quickly as possible.
Okay, so no real major step changes here. Just looking at a heap leach. Okay, but what does the infrastructure near site look like? What might you have to do to ensure you've got power and water and access and everything that you need for a tier one or a major asset?
Yeah, water's not a problem. In fact, we have too much of it in the groundwater. There is so much water. And again, we try and use as little as possible because we don't want to contaminate it. So we'll have to discharge some for the open pits. Power generally, as I said, is not normally a problem. We are 50 kilometers away from the Kariba Dam, the world's largest man-made lake, which supports the Kariba Dam. And the grid goes all the way into that port. So we've already been negotiating with ZESCO on that power line to come through. Normally that would be a major source, but we'll also put in backup, particularly in solar, and then we can add diesel if we have to in the future. So the grid is there. From the road, we have a metalled road within a couple of kilometers of the project. We have an access road we use, and our export route will be along that road and out to Livingston onto the double lane highway that goes through the Caprivi Strip and out to Wolfish Bay for delivery. We're near the Chirundu gate as well into Zimbabwe, so stuff that comes out of South Africa, stuff that comes across from Tanzania. So great infrastructure in all directions.
Right.
And I think the other thing I will point out, which I didn't, David, sorry to interrupt you there. One of the other benefits for us as well is our low acid consumption is a country that produces acid. The Copper Belt produces acid because it runs its smelters, and you produce a lot of CO2 in the smelters, and the best and most effective way of getting rid of it is turning it into sulfuric acid, which is sold into the international market. And on top of that, Ivanhoe are about to build a big smelter up at Kamoa. So there'll be even more smelted capacity around as well, producing sulfuric acid. So very good, very positive. On the process side, this rock is really soft. You can break it by standing on it. So we don't need to mill, we just crush. So we have very low power demand on it as well.
Okay. Can you give us any color on what scale of project you anticipate to announce in the feasibility?
Yeah, still looking for that
range
in the PEA of about £2 to £2.5 million. That's still our target. So still keeping to the same scale.
Okay. Next steps after feasibility study?
Yeah, try and find the funding to build it. Effectively go straight out. We'll start working with the community. We do have to move a community, but we've been very much engaged with them. So there's that process to go through. We obviously have to work through the ESIA sign-off. As I said, I don't think that's a major issue. And then the other side of that will be financing. On the NEI conference I was at recently, a lot of interest from the North American utilities looking for alternative supply sources going forward. And that applies when we do the WNA and the European. So a lot of interest on that side. When we had to advise our potential lenders in Niger that we wouldn't be seeking their services any longer, they did ask us to send our FS document to them for Muntanga. And at the beginning of this year, I was at Indaba, and certainly we had a lot of interest out of the South African lenders down there as well. So that we know where to go back to on that conversation. And the target would be to get all of that done by the end of next year, and we'd probably look to do some low-cost early works to get ourselves in and ready, and then we can accelerate construction going into 2026.
Yeah. Do you have any idea what sort of project funding mix you might be looking at between equity, debt, offtakes, maybe JV partner?
On the normal debt equity, then we'd obviously be looking at somewhere like this 70, 30, 60, 40, somewhere in that range. I don't see, without having the numbers in front of me, hard to predict, but that would be our target to go down that route. On offtake, I don't know anyone at the moment who's offering offtake financing from a uranium perspective. The last ones who did it were Paladin. It was EDF for Paladin, and they got so burnt that they will actually now only take uranium from producers. So if you can get into production, ADF will look at you, but if you won't, they're not interested. They got so burnt on that transaction. Obviously there's things like the royalty companies, but that'll obviously depend on what the cost of financing looks like relative to the debt and the equity side of it. On JV partners, obviously until we have an FS and we see who's out there who's interested, difficult to answer that question, but we have to look at the alternatives.
Mm-hmm. So kudos for all the educational initiatives you've undertaken in Zambia. How does the local workforce look for when it comes time that you want to expand your local workforce?
At the moment, we've got a lot of training to do for our very local workforce. I mean, that's very clear, and that's been where a lot of our focus has been. So, for example, with the training colleges, we're looking to set up and build a small training college. I mean, just 2 classrooms in a workshop, but we're focused on things like electrical, mechanical, plumbing, because while they are at a more basic level, a pipe is a pipe and electricity is electricity, and we can then train people up when we get into operations. If somebody's got mechanical understanding, then obviously once we bring in, say, Caterpillar, if that's who we decide to buy our equipment for them, there are Caterpillar training programs, and we can start to use that. There are a number of colleges within Zambia we've discovered who actually do equipment training as well. So we can work with 2 of those and take as much of our labor to that college and get them trained up on how to drive equipment before it arrives. The other benefit of things like this on the education is we're not just trying to teach skills, we're trying to figure out who the right people are. And as well, so if somebody streams through an electrical program, he might not be an electrician for us, he might be a foreman instead. So we're trying to figure out where those skill sets are and how those people operate. So it is very much something we recognize. We are in Zambia, and there are obviously a lot of the skilled people from other parts of Zambia we're looking to come in, but the lower skilled people very much focused on the local population.
Right. And not looking to displace Indian Zambian workers, of course, but do you still have personnel left in Niger, and would any of them be available to move the project forward if necessary?
No. In simple terms, we try and keep Nigerians in Niger and Zambians in Zambia. And as you can appreciate, across most jurisdictions around the world now, a continued focus on local procurement, local content, local employment. So very much focused on the local of where we are.
Right. Okay. Any update on the Chirundu mining license? Is that expected to be renewed here?
It's still valid. I mean, there's nothing unvalid about it. It's a valid contract, and the way we have presented the project all the way through to the ministry, it is a single project. You have to remember when Chirundu we had the issue back in 2019. We had only just picked it up for Africa Energy when it was standing on its own, and we brought it into the Greater Muntanga. So what the ministry will be presented is a larger Muntanga project that includes mining from all three licenses. The ESIA will be all three licenses. So we spent a lot of time making sure the government understands that it's not the Chirundu license on its own. It's part of the much bigger Muntanga project and those deposits, which are only a small part of the total project, and would be mined towards the back end probably anyway, because the core is that Muntanga Dibwe East and potential that Muntanga East exploration to add in. That's the core to this. But no, very much an education program with the government all the way along there, that this is one big project that gets built up together. Chirundu is part of Muntanga project. It's not standing by itself.
Okay. We've got through a lot of these questions pretty quickly. Maybe one last one before I let you go. A couple of weeks ago, Kazatomprom quietly announced they'd be delivering some massive quantities of uranium into China, probably enough that they actually needed shareholder approval to do so. How do you see the outlook for Kazatomprom regarding, uranium supply to the Western utilities going forward?
Very, very interesting question, actually. I think the first thing I would say about Kazatomprom, it just probably peaked on its production now. Bataskaya really hasn't even got going yet. So that's the thing that's supposed to fill the gap, and they've got a long way to go. They've got a lot of exploration to do to try and find new resources, because they've been somewhat sitting on their laurels where they are. They are now gradually fixing their sulfuric acid problem, but things like Bataskaya need a lot more acid anyway. You're absolutely right. I mean, a lot of uranium is going into China. Even their own presentations, and if you listen to Cameco as well, the Caspian Sea route doesn't make any sense. I mean, it just really doesn't work. It is very restrictive trying to come through St. Petersburg with all the various sanctions, etc., or restrictions that are placed on it there. And so you are finding at the moment, I think almost 70% of everything produced in Kazakhstan, is going direct into China. The other 30% is going into Russia. And then Russia, very good presentation we had there, is literally desperate for uranium. I mean, it's got its own production build going out. It has been very successful in putting in new contracts for nuclear reactors around the world, places like Turkey, into Africa, etc. And it needs production, and it needs uranium supply for that as well. And it actually doesn't have any big uranium mines of its own, really, or they're very high cost. So it moved into Kazakhstan to get material feed. So I think you're going to be looking at a position going forward where Kazatomprom's flat production profile to decline profile as we move forward into the 2030s is going either into China or it is going into Russia to meet theirs, with very little to small amounts actually getting out. I mean, we've seen some material obviously coming out of China. They've said under EUP that's theirs. It's not Kazakh material or Russian material, but that's maybe one place for leakage. Is EUP coming out. But I mean, as China ramps up, its EUP capacity is going to gradually get absorbed as well, as it needs it for its own reaction. I mean, you've got to remember, China's going from 11,000 tons of uranium in 2022 to 40,000 tons of uranium consumed by 2040. So it needs the material. And if Kazatomprom is its primary feed and it's not going to grow, it's got to go somewhere else to find it. And it can't import from China. It cannot import from Canada, and it cannot import from Australia on safeguarding issues. So kind of leaves Africa as the place it wants to be hunting for material.
Yeah, this all comes down to security of supply. Do you think this will create another run on uranium assets around the globe? I think we saw this, a decade and a half ago, 2011. I think it was the Russians into Tanzania, the Chinese into Namibia in a big way. Is this going to happen again, and maybe even especially in Africa?
I think especially in Africa. I mean, it's not just in uranium. You see it in the critical minerals industries as well. I mean, if you want to find critical minerals, the place that people are heading towards is into Africa to find those minerals. And there is already a ongoing battle, economic battle between particularly the US, Europe, and China. Only last week, the Americans opened a trade mission into their embassy out of Zambia, trying to increase their influence and the mighty dollar's influence into that part of the world, to try and squeeze out the Chinese, who have got an incredible hold on that. I mean, if you go to Ndola and Kitwe in the north, all of the road signs and all the airport signs are in English and Chinese. So you can see that instances there. So yes, the US at the moment, reactors, obviously hoping that the US producers start up, but they're heavily weighted to Canadian supply and a reliance on Canadian supply. I think the other thing that I found interesting as well, David, sorry, on an aside, was an increasing propensity now with the utilities, given tight markets that are out there, to change their reloads from 18 months to 24 months. That's very important because, one, they're trying to sell more power, but two, it actually consumes more energy. Uranium. So you're looking at guys going from 600,000 pounds of uranium to using 700,000 pounds of uranium. So it is having an effect, and they're doing it because the grids need to keep running, and they need to improve those capacities. So it's another way that we're starting to see more and more uranium be consumed as we head down into higher strength uranium products as well, the HALEUs, etc. They consumed even more uranium. So this isn't just about more power and more uranium. It's more inefficient use of uranium as well, not more efficient, which will obviously mean more demand for uranium.
Exactly. Okay. Well, Daniel, I think we've covered a lot of things very quickly here. So thank you for joining us today.
It's an absolute pleasure, and thank you very much. And yeah, we look forward to, again, speaking soon, hopefully with the Muntanga feasibility study under our belt.
Looking forward to it. So thank you everybody else for tuning in. Red Cloud Securities will be back tomorrow afternoon when Alina sits down with Delta Resources. So that's November 5th at 2 p.m. Eastern. So have a great day, and thanks for supporting Red Cloud's webinar series.